Good morning, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It's Wednesday morning, November 13, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. A rise in government bond yields put a pause on a vigorous stock market rally that has propelled major indexes to records in recent sessions. US stocks edged lower after the S&P 500, Dow Industrials and Nasdaq Composite hit fresh all-time highs on Monday. The S&P 500 notched its first decline since election day, which triggered a roaring rally across stocks and cryptocurrencies. Stock investors have seemed giddy about the prospect of a Donald Trump presidency, with major indexes just finishing the best week of the year and touching fresh highs on Monday. The indexes had rallied to record highs since November 5 US election as investors bet on a boost to equities from President elect Donald Trump's proposed tax cuts and the prospect of easier regulatory policies. On Tuesday, the Dow Jones Industrial Average fell 382 points or 0.86% to 43,910. The S&P 500 lost 17 points or 0.29% to 5,984, and the Nasdaq Composite also lost 17 points or 0.09% to 19,281. The small cap Russell 2000 index fell 1.8% after closing at a 3-year high on Monday. Some of the stocks gave back gains. For instance, shares in electric car maker Tesla closed down 6% on Tuesday after rising nearly 40% since election day. Also, rising US Treasury yields hurt equities. The bond market has been sending a different signal. The yield on the 10-year Treasury note edged up to 4.430% on Tuesday, up from 4.307% on Friday. The yield climb in recent weeks reflects heightened concern about inflation, which some economists say could worsen under a Trump administration. Many investors are also expecting bigger government deficits in coming years, which could put further upward pressure on bond yields. At some point, that could catch up to the stock market. Still, the euphoria that has swept markets over the past week was evident in other corners of the trading. Bitcoin notched a near new peak near $90,000 on Tuesday. Retail investors are flooding back to the crypto exchange traded funds that launched early this year. Bitcoin rose 2.8% to 89,525, a new all time high. The virtual currency is up 17% over the past 3 days, its sharpest rise in a 3 day period since March 2023. The Dow's biggest decliner was Amgen, which closed down more than 7% due to a late session sell off. Amgen's experimental obesity drug, Maritide, showed a 4% loss in bone mineral density in data that was published in February. Biotech firm Novavax dropped 6% after cutting its annual revenue forecast due to lower than expected sales of its COVID 19 vaccine. Honeywell hit a record high and closed up 3.8% after activist investor Elliott Investment said it has built a stake worth more than $5 billion in the industrial conglomerate. Among the S&P 500's 11 major industry sectors, materials led declines with a 1.6% loss followed by healthcare, which was dragged down by Amgen. The communications services index was the biggest sector gainer, adding 0.5%. In commodities, West Texas Intermediate crude was little changed. Spot gold fell 0.7% to $2,600 an ounce. On the investors' radar is Wednesday's consumer price inflation data, followed by producer prices inflation and retail sales data later this week, as these could provide clues about the US Federal Reserve's policy path going forward. That's it for today, folks. I'll see you again tomorrow morning. In the meantime, let us know in the comment section what are your thoughts for the market today. Happy investing, stay inspired, and remember, it is all about money.